This is our Forex blog for September 21st, 2011. I have a stand-up treadmill desk, so if you hear a weird noise in the background, it's just because I'm walking while I do this presentation. Like most days, the currency meter is key. If you are in the strongest trending currencies, you're going to have a higher winning percentage. You're going to have bigger wins when the trades work, and your losses are more likely to become break-evens or smaller than what you initially risk. Key to trading is small losses, big wins, and that's why the currency meter works. This shows you each individual currency compared against all the other currencies on multiple time frames using multiple different tools. Some of the tools and we average them together. Some of the tools measure direction, and other ones measure intensity of direction. So the only time you can possibly have a reading at and above the 80 level is when, for example, the euro at 840 right here is going up against almost every other currency, and it's doing so with incredible intensity, which means that trend's likely to continue. Underneath the real-time statistical combination of direction and intensity, we have the intermediate time frame trend. Underneath that we have the daily trend. Underneath that we have the weekly, and underneath that we have the monthly. Whenever you have a currency that's pretty much green on all time frames, like at 230 right here, the dollar, it's very likely that that currency is going to, have some strength in the future and have some intensity in the future, which you can see it does for most of the day. You want to trade the dollar and the yen even more importantly because it's stronger. The weekly monthly trend are stronger. The daily trend was up for the whole day. The intermediate time frame trend was more consistently green, and the peaks, were at and above the 80 level with almost no, with the exception of one 5-minute bar here and one 5-minute bar here, of a little bit of weakness that didn't continue. The pound was consistently the weakest on all time frames. The Swiss, starting the day off had incredible weakness. The daily, weekly, and monthly trend is down 11 o'clock until about 3. You could be looking to sell the Swiss, and then some intermediate time frame in the real-time trend got strong. But there's no doubt that the pound's the weakest, at least earlier in the day. So you want to sell the pound dollar and the pound yen. So let's bring that chart up. Starting the day off, the pound is above. The gray line in the middle shows the hourly moving average. This is a separate, we order hourly data and show you the 20-period moving average on your chart. Above there, it tends to go up. Below there, it tends to go down. I have the new Intella stop on here that instead of using those dots for the trailing stop, it uses a line that looks just like a regular chandelier. So basically, you're looking to sell it once it broke the hourly, and it got the intelligent trailing stop knows how strong or weak the pound dollar is, and if the pound's weak, it has a wide stop. As soon as the pound weakness goes away, it tightens the stop. It's an intelligent tool. You can use these for entries and exits. If the pound's weak and the dollar's strong, you're looking to sell it. Notice it went short here, out here. Notice it flipped green and the market trended up. Got you out of that with a nice little profit on the counter trend trade here from 36 to 65, went up 30 pips. You went short again. Got you out right down here near the lows. Now the pound was weak and the yen was even stronger than the dollar. So as we bring up the pound yen, you can see that this one was underneath the hourly. You look to go short, out with about 20 pips profit. Short again, about a break even. Short again, you made about 30 pips. You wait for a little pullback. Short again, and it got you out somewhere down here at 31. You made about 20 pips on that one. Later in the day, the New Zealand became weak around 8:30. And one of the ways of using the currency meter is when you see some weakness, wait and see on the next counter trend move, the green, if it goes up for half an hour or an hour, and it really doesn't have that many bars at and above the 80 level, then you want to trade in the direction of the last momentum play, which is down. Momentum tends to continue. Now this one's not quite as good as the pound in that the weekly trend is up, shifted to intermediate up. The monthly trend is just barely up. But anytime you see a peak like that, and then some weakness comes back, at 9 o'clock right here, you could trade that against whatever's the strongest. The strongest one at 9 was the euro. I'm having some problems with eSignal. Hopefully they'll let me bring up a Euro New Zealand chart. Okay, yeah, here we go. So the strongest one was the euro at the time. The New Zealand's the weakest. And even if you missed the first wave of this at 9 o'clock, right? Even if you got into this at 10 o'clock on the first pullback, you can see this went up 190 something pips because the currency meter works. Now, a lot of people don't trade the Euro New Zealand. I'm one of them. I don't trade it that often, maybe a few times a year. But when one currency is off the chart strong and the other one's super weak, you want to trade it. Now, the Euro pretty much went up against everything. Anytime you see plus 80 bars, bar after bar after bar, the only pullback is very insignificant. As soon as you saw a green bar here at 10.15, you might wanted to buy the Euro against everything, and hedge your risk. Let's look at some of the other trades. The Australian, the weekly and monthly trend are down. Of all the longer time frame trends, I focus mostly on the weekly, which is the second from the bottom. Real time's down, intermediate time frame's down, the daily's up. But obviously the shorter time frame trends shift first, and then the intermediate, then the daily, and then the other ones. These are already down. So at 3 o'clock right here, what is a strong currency? The yen is one of the stronger ones. So therefore you want to sell the weak Australian against the strong yen. Right? At 1 o'clock, you can see, you have a small 10 pip move, a 20 pip move, a break even here, a 25 pip move, and so forth. No super 30 to 50 pip moves, but plenty of 10 to 20 pip swings that you could have traded and made money on. 10 pips per day net doubles your account every 2 months using very tiny amount of leverage. So, if you catch a 10 pip move, you've hit your goal. You hit a 10 pip and a 20 pip, you have 3 days worth of net profit. Now, another one that was weak for the most of the day was the pound. It wasn't quite weak here when the euro got strong, but nonetheless, the pound was weak all day. It's weak on all time frames. The euro has extreme strength. The euro pound is going to go up too. Excuse me. So if you missed this 9 o'clock when the euro got strong, you buy the first pullback, you can see a nice little 30 pip move up. The Australian was also weak today, so you're going to see a Euro Australian also go up a lot. And you can also go down to a range bar to find a couple trades on charts that regular 5-minute bars don't give you. So I am having problems with e-signal data. So when you leave it running for multiple days and you have multiple copies up, sometimes it doesn't take new data requests, especially when you order a ton of data. So it's probably not going to come up. It's not a problem when you first start the software. So earlier today, the euro wasn't the strongest one. In fact, it was quite weak. And the dollar and the yen were strong, pretty much the only two strong ones. So you would have wanted to, sell the euro dollar against, or you would have wanted to sell the euro against the dollar and against the yen. Actually, let's bring up the regular chart we use. Now, when it's above the hourly, it's likely to find some support at the hourly, but once it finds some support and you don't get a bounce here, very safe sell here. That fell about 15 pips, came back up, couldn't get back above the hourly here. This is a decent sell, decent sell, decent sell. And then at 9, the market got strong. Now, the price was underneath the hourly here, so you might have wanted to wait for it to go back above the hourly right here. You can see when it did, and it had that pullback, found support to hourly. That's one of the highest probability trades you can find.